Preston, welcome to Constituting America's Constitutional Chats. We would love to have you just give a few opening comments and then we'll go to questions.
Well, thank you so much, Kathy, and everyone for having me on. It's great to be here today to talk about what is a very timely topic. Obviously, in addition to it being tax day in about a week, there was also a recent release of an IRS report talking about how the IRS would spend the additional $80 billion that it received in the so-called Inflation Reduction Act that passed last summer. So I'm looking forward to talking with you, answering questions. But just jumping in, the news came out just last week, about the strategic operating plan. So I'm still kind of digesting everything that's in there. It's about 150 pages, but I think there's a lot of good information in there. Maybe not as many details as there should be, but it does answer some questions. When the Inflation Reduction Act was being debated last summer, the $80 billion of new funding for the IRS was one of the most controversial aspects. But despite its unpopularity, the IRS funding was included in the bill because the legislation's supporters needed to be able to point to the new IRS collections in order to be able to claim that the bill was fiscally responsible. So why does that matter? Well, it's important to understand that the Inflation Reduction Act followed a failed push to pass the Build Back Better Act through Congress. And the Build Back Better Act was a much larger bill that failed largely because it carried such a large price tag. And since it was funded through deficits, it was widely perceived that that bill would contribute to more inflation. And so they were eager to have some provisions that would raise revenues. And one of the ways they did that was through this IRS funding provision. But nonetheless, many Americans were skeptical of the idea of almost doubling the size of the IRS, especially since the lion's share of the new funding was set aside specifically for enforcement. That is to say, audits, asset monitoring, collections, litigation, all the fun stuff. Paying more taxes to fund government revenue agents who are there to get more taxes out of Americans' pockets and into the government coffers is always going to be a tough sell. So the IRS and supporters of the IRA pushed the notion that 98% of Americans didn't have anything to worry about. The audit rate on people making less than $400,000, they told us, would not increase relative to historical levels. That begs the question, though, if the IRS doesn't audit people that report less than $400,000, how does it know that those people aren't actually earning much more than that and just underreporting their income? Obviously, a big part of audits is to make sure that people's income is what they say it is. So it's obviously a little bit trickier and harder, easier said than done, to set a threshold and say that no one below this threshold is going to be impacted. There's nothing in the legislation that tells the IRS who to audit and who not to audit. In fact, everyone that voted for the bill also voted down an amendment that would have restricted the IRS from using the new funds to increase audits on Americans making less than $400,000. That was an amendment that was proposed and that was struck down. They also claimed, the supporters of the bill claimed, that small businesses had nothing to worry about. The issue here is that small business was defined based off the same $400,000 threshold. And if you stop and think, let me ask you all this, how many of you don't have to raise your hands or anything, but how many of you all work for a business that you think makes less than $400,000? My guess is, unless you're self-employed, probably very few of you. $400,000 is just not that much for a business, and most of the companies that we think of as small businesses will earn more than that. So even if we accept the premise that businesses and business owners making less than $400,000 wouldn't be subject to more audits, this legislation is still opening the door to audits on the vast majority of business activity in America. And the simple truth of the matter is that big corporations will probably be just fine. They've already got big tax teams. They're already subject to lots of audits. If there's additional costs, they can spread that across a very large organization. Walmart's going to be fine. Microsoft's going to be fine. But if you're talking about the small grocer or the small startup tech company down the street, that audit or that enhanced scrutiny could be devastating because they just don't have the resources to spare for tax purposes. So getting now to the strategic operating plan, what is actually in the plan? There are some details about the taxpayer services. That's kind of the focus, I think, of the plan that they've provided, is to highlight the taxpayer services that the IRS is hoping to open it up. But really, I would say it's probably mostly a PR document. Even though the IRS has been allocated 15 times as much new funding for enforcement as it has for taxpayer services, they dedicate almost twice as much of the document to discussing the taxpayer services as to discussing enforcement. The first section of the report, they start with the taxpayer services, and it's titled "Dramatically Improve Services to Help Taxpayers Meet Their Obligations and Receive the Tax Incentives for Which They Are Eligible." So really putting a positive spin on what they're doing. And then you get to the section on enforcement, which again is by far the largest portion of the additional funding that they're getting, and that's buried in the middle. And if you were to look at the title alone, you'd assume that they're mostly just shifting resources around rather than receiving essentially almost a doubling of the amount of resources and funding and agents dedicated to the audits. That section is titled "Focus on Expanded Enforcement on Taxpayers with Complex Tax Filings and High Dollar Non-Compliance to Address the Tax Gap." And that section is the enforcement section is very vague. It repeats the same claims about not raising audit rates on people making less than 400,000, but it doesn't really provide much detail beyond that. Now, there are no figures showing targets for increased audit rates or increased collections on different types of businesses or high wealth individuals. And then the other section in the report, they talk about resolving issues quickly, deploying improved technology, hiring, and how they will implement the new climate provisions that were part of the Inflation Reduction Act. Now, part of the reason that the IRS is so vague on the details of their enforcement funding is that they're largely putting that off, actually, putting off a step-up enforcement until at least FY 2025. And the document, the report, I would say conveniently focuses almost entirely only on the first 2 years of the 9-year funding window. So in 2023 and 2024, the IRS plans to spend only 3.9% of its $46 billion enforcement budget. In contrast, in the same period, it plans to spend over half, 52.5% of its $3.2 billion taxpayer services budget. So whether by accident or by design, they're front-loading the things that people mostly like, things like an improved interface, customer interface, taxpayer interface, additional features, additional forms that you can file digitally versus through paper. They're doing that sort of thing early on, and they're backloading the audits. And they've shared very few of the details on what the audits and enforcement situation will look like. It's worth noting that although it was vetoed by President Biden, the House recently voted to rescind the new IRS enforcement funding, but not the taxpayer services funding. Of course, that was vetoed, so that didn't take effect. But because of that, the IRS might be especially concerned about kind of PR in the short to medium term. So in 2023 and 2024, these next 2 years, as the IRS burns through its taxpayer service budget at 13.5 times the rate it burns through its enforcement budget, this may allow proponents of the funding to point to improvements in IRS backlogs, call wait times, taxpayer-facing technologies. But unfortunately, that roughly even split of spending between taxpayer services and enforcement early on is eventually going to give way to a dramatic increase in audits and enforcement activity. Again, more than 96% of the massive uptick in funding for audits and enforcement will still be looming as of 2025 through 2031, the last 7 years of the budget window, assuming no changes to IRS funding levels. And that means that the remaining budget as of October 1st, 2024, which is the beginning of the 2025 fiscal year, there will be $1.5 billion left over for taxpayer services, but $44 billion for enforcement. So that's a lot of audits that we have to look forward to. So with that, I will go ahead and open it up to the panel.
Well, thank you. That was a great breakdown on what exactly is passed, what is in there, and how it's going to be allocated. Because I mean, despite all the news stories that I read on this and getting ready for this episode, I didn't see anything as thorough as what you just gave us. So thank you very much. I know we've got a lot of questions, and Janine, would you like to kick it off?
Sure. I echo Kathy's sentiments that it was a very thorough breakdown. So I appreciate that so much. Um, well, it's just okay. Huh. Let me wrap my brain around this. $44 billion are going to be put toward auditing Americans. That's what you said, right?
Uh, it's really going to be more than that for several reasons. The 44 billion is just what's left over after the first 2 years. So there's really $46 billion, but there's also a lot of the operations that's actually kind of supporting the auditors. So that'd be things like, when we're talking about the $46 billion, that actually doesn't include things like rent. That doesn't include some of the support services that are helping the auditors. So yeah, the enforcement is by far the largest component of what the bill is about.
And so the bill set forth, and if you said this, I'm sorry I didn't catch it, but the bill set forth how many billions for these, what is it, 82,000 new IRS agents? What's
Yeah,
their
so
budget for this?
it's 87,000 is the number based off of a 2021 IRS document. 27 or 87,000 full-time employees or equivalent employees. And it is approximately $80 billion of total funding. There's $46 billion for that's dedicated explicitly for enforcement. There's about $3 billion that is dedicated to taxpayer services. There's about $4 billion that's dedicated to improving the IRS technology, which frankly needs to be improved. And then there's about $25 billion for operations. And again, that operations that's kind of the internal, portions of the IRS that support the rest of the other functions. So that's going to be, again, things like rent and things like
So,
all those things that help to fund all the other parts of the organization.
right. So essentially 87,000 new agents and $80 billion. So it's $1 billion per agent.
Roughly, yeah,
Essentially.
works out that way, yeah.
$1 billion per agent. Okay, so we've got that roughly. That's just a rough assessment there. That's a lot of money, and it's a shame that we can't just say, okay, it's going to be a flat tax. Everybody pays 10% or whatever, a flat tax, and it's one piece of paper, we're done. Wouldn't that be great? But think of all these people that would be out of a job. The the frightening thing about this, I believe, is, as you say, they can't know if you're making under $400,000 a year unless they look at you. Otherwise, how are they going to know? But the amount of money, here they are flush with $1 billion per agent, so to speak. And the amount of money it costs, if a small business or even a person that's making it doesn't even matter if you're made. First of all, I don't trust that under 400,000 won't be audited. Let me just put that there. I don't trust that for one hot second. But secondly, whether you're making under 400,000 or just above 400,000, the amount of money it's going to cost to hire an accountant. I mean, what's the going rate these days? 400, 500, 600. Attorneys are $900 an hour. Accountants are 400, 500, $600 an hour. I mean, this is just very frightening for people. And I guess my question to you is, if they're already putting in $880 billion, they're going to have to audit a lot of people and bring back a lot of money to even break even with that 80 billion.
Yeah, I think you hit exactly on, I think, my biggest point in this, and my biggest criticism of the way that this is often spoken about from the IRS perspective and others in government and people that are supportive of bigger government, is they tend to think about this, and they'll sometimes even use the term return on investment. This is a great return on the investment because we think, they think, if you look at the CBO numbers, for example, they say, oh, we're going to get $180 billion out of this. And so the fact that we're pouring $80 billion of taxpayer money into the IRS, see, you got $100 billion difference there. So that's actually a great return on the investment. But that, of course, as you point out, that ignores the huge cost that imposes on, and it's really, I mean, I can't emphasize enough, I think, how much small businesses are really going to be taking it on the chin. because business taxes are just harder. And so there's just more uncertainty there. And corporations, they're already pretty heavily audited. Small businesses are to some extent, but it's they don't have the resources. And fortunately, they're not at this point scrutinized to the same level of big corporations. And so when they're saying, a small business is anyone making more than $400,000, is only people making businesses making less than $400,000. That's such a narrow range, and that's going to capture the vast majority of business activity. Small grocers, small shops,
So may I interrupt you there? Are they going to focus on businesses making less than $400,000?
No, sorry. It's more than $400,000.
Right.
But that's still a very, very low bar.
Yes. It's what happened to that great concern that was creating a lot of consternation that the IRS was going to be able to go into anybody's bank account willy-nilly, audit or not, and check your income over a certain, like over $500 or something. Can you flesh that out for us? What was that, and what happened with that?
Yeah, so very early on, and there have been a few different iterations of it. Their first iteration of that was basically, I think this was as part of the Build Back Better plan. They wanted essentially to have any bank account, or if you had $600 or more in it, they wanted to have visibility into what's happening, and they wanted those banks to have to report essentially all that information to the IRS. There was a lot of pushback, and I would say that's one good thing. I think that's come out of some of these debates, is there has been a lot of pushback to some of these more extreme plans, and so that proposal, they kind of walked that back a little bit. So that most extreme proposal was walked back. That they did include in the Inflation Reduction Act that third-party service providers. So there we're talking about Venmo, anyone that's getting kind of through some sort of digital platform, if they're receiving funds. So it could be that you're getting money off of Etsy or PayPal. Potentially they wanted to have more visibility into what was going on there. And so one of the things they kind of came down to was, instead of getting the full visibility on all the bank accounts, we just want to look at these third-party processors and Venmo and PayPal. So we're going to have Venmo and PayPal. Now, anyone that we think might be a business, they need to PayPal, Venmo, they need to be reporting on those people that are working through their platform on the amount of income that they're receiving, so that we have the same sort of visibility that we have with, say, people's wages, because they can compare people's wages a little bit more easily, because employers are generally having to report the wages to the IRS, so they already have that information. And if you don't file your taxes, if you leave out your wage income, they're going to know it because they have that visibility. Of course, there's a lot of people that are concerned about exactly what that means, because not all of the income that people are receiving on these platforms is necessarily taxable. And so when people are going to start receiving these reports, that's this 1099 form, 1099K form that says you have this much income from eBay or this much income from Venmo, people might look at that and assume that that's taxable, and it's going to cause a lot, I think, of people to report income that is not actually taxable, versus that maybe there being some taxable income that is not being reported now. So it's kind of switching the. And
so that means PayPal or Venmo or any of these are now automatically going to have to report any monies that go through there,
unless you have selected, and it's going to vary, I think, depending on the specific platform, how they do this. But unless you have elected into basically saying, no, absolutely everything in here is just like me and my roommates exchanging cash, there's no services being provided. So if they think that it might be business, then that has to be reported. And of course, it could be selling a couch, it could be selling, $600 is not a big threshold to meet over the course of a year.
Right, that's true. Okay, well, so did you? I guess I'll pass. I could flesh this out with you forever, but did you say that this is a limited amount of time for the 87,800 agents
Yeah.
equaling $1 billion per agent. I just love saying that. I know that's not literal, but it's still fun to say.
Yeah.
Does this elapse in 9 years? And of course, unless they can vote to continue it. Is there a
So-
time limit on this?
So, and I don't know if I was clear about this, but the $80 billion increase in the funding, that's an increase relative to the current amounts. So the current amount of annual funding is, I think, somewhere around $12.5 billion per year. But that $80 billion, it ramps up so that by the end of it, you're talking about in year 9, you're talking about actually more than a doubling of the size of the budget relative to baseline levels. Yes, it is temporary in the sense that it runs out at that 9-year window, but we're talking about a supplemental funding. They're obviously going to be pushing to make this permanent. We usually don't think beyond the 10-year window when we're talking about budgeting. So although it is temporary in that sense, I certainly think the IRS doesn't want it to be temporary. And in fact, if you look, one of the interesting things in the document that they put out is they talk about climate funding. And so that's the funding that the IRS is receiving, the supplemental funding that the IRS receives essentially to implement the new climate provisions of the Inflation Reduction Act. And they received a $500 million supplemental funding to implement those provisions. And I forget the exact number, but I think they said that what they actually needed was at least $3 billion. And so even within this document that's talking about how they're going to use their $80 billion, they're already essentially saying, no, this is not enough. We actually need more, which I think is kind of incredible and takes a little bit of chutzpah.
And in conclusion, before I pass, so did you say the original budget for the IRS was 12 billion and they just increased it by 80 billion?
Well, sorry, I should say that 12 billion is the annual. The $80 billion is over the course of the budget window. So by the end of it, I think the
9 years.
Yeah, in the ninth year, they're going to be at, I believe it's 14 something billion. So by the end, they get up to the point where it's essentially a double the size of the IRS.
Okay, you lost me. I heard 12 billion, I heard 14 billion, and then I've heard 80 billion. So
Sorry.
could you just clarify
I'll
that?
slow down.
Okay.
So the current, I believe, and I may be off slightly on these numbers, but roughly, current budget would be about 12 billion per year.
Mm-hmm.
And that's the baseline kind of annual appropriations.
Right.
The $80 billion is over the course of 9 years, and that ramps up over time. And so by the end, the way they've laid it out is essentially that by year 9, you're talking about $14 billion. So roughly a doubling of the size of the IRS by year 9.
But 14 isn't a double of 12.
Well, yeah, but the baseline would grow over time with inflation, probably. It's roughly.
What's happening to the 80 billion then?
The 80 billion is over the course of 9 years. The 14 billion is annual in the 9th year.
Mm-hmm, mm-hmm.
So
Okay.
when we're doing budgeting, we're usually looking at 10-year windows, but this was kind of done at the end of the first year, so it ends up being more like a 9-year window.
Could be an extra 8 billion a year.
So it's more like nine something billion per year over the course of 9 years.
Okay.
About 9 billion.
I still don't see how that gets us to 14, but that's okay. Okay, I'm gonna
it grows over time. So the first couple of years, it takes them a while to ramp that up because they're hiring new people. So the first few years, it's smaller. And so when we're talking about the 2-year plan that they put out, it's really not at the first couple of years, we're really not seeing the full impact of what's going to happen. The way they've laid it out is that by year 9, they're actually talking about a massive increase in the size of the agency, where they're talking about essentially doubling the size of the workforce, doubling the size of the budget.
Yeah. Okay. I think we are finding a lot more areas in our country right now that need money. But anywho, thank you so much, and I'm going to pass now.
Yes, hi. Thanks so much for being on. I had some questions about just comparing the current situation to others. So for instance, have there been like comparative increases in the IRS budget in the past, and like what was the result of these?
Good question. So the IRS budget, and this is one of the major, I guess, catalysts behind them wanting to pass this is they've been claiming, oh, the IRS budget has shrunk as a percentage of GDP, or as a shrunk as a size of the federal budget since 2010. Part of the reason for that, by the way, is there was a lot more, I guess, scrutiny on the IRS and distrust of the IRS after, if you recall, there was kind of the targeting. The IRS was targeting conservative groups, conservative nonprofit groups during the Lois Lerner era of the IRS. And so after that, there was maybe a little bit less goodwill between some in Congress and the IRS. And so the budgets shrank a little bit, not dramatically. What I would say to that, though, is that is kind of natural. If you think about what the IRS does, the IRS, or traditionally, if you go back 40, 50 years, what was the IRS doing? Everyone was filling out their forms on paper copies and sending that in. And so people were having to take all these, open up envelopes, take these returns out, do everything by hand. The fact that the size of the IRS, the number of agents, went down a little bit over time, I don't necessarily view that as being an oddity or something that should concern people. That should be kind of the expectation, that with technology, with the fact that we're now doing everything online, that most of us, when we file, a lot of that's kind of automatic, and technology should make that a lot easier. The fact that there was a small decrease over time, I don't see that as being necessarily deeply problematic. The other aspect of it, though, and I think probably the most important aspect of the IRS, and actually this I think touches on a point that Janine brought up earlier, is the complexity or simplicity of the tax code. So there's a quote that I think was interesting, that in the IRS operating plan, and it said, "Some returns are thousands of pages long, requiring hundreds of staff hours to effectively review." And that's really kind of the point, is they've made the tax code enormously complex, that despite all the advances in technology, it still requires a lot of people at the IRS. It requires a lot of our time as individual taxpayers, and not to mention all the accountants that we hire in order to handle the burden that's placed on us to comply with this very, very complex tax code. And of course, what happened with the Inflation Reduction Act, I mentioned the $3 billion that they were asking for. Essentially what happened there was they passed a bunch of additional complicated credits that the IRS now has to implement. And that they're saying we need a bunch of additional money to administer these programs. So part of I think the big part of the solution would be, as was, I think Kathy mentioned earlier, is simplifying the tax code would largely make at least these types of numbers for the IRS unnecessary.
I see. Yeah. Thanks so much for providing that context. It's really fascinating to look back. And then I'm curious, also comparing our tax code to those of other countries, how typically does our tax code compare in that context? Is it, significantly more complicated than other countries in terms of the budget allocated to the IRS? Is that more or less than, comparative departments in other countries?
I would say it definitely depends. There are some that Estonia is an example of a country that has kind of a very clean and efficient tax system. I will say there's no country out there that I would say they have it all together, that it's perfect, but there's a few that are certainly better. The US, I would say, is not the worst in the world in terms of the tax system. It is, but it does, I think, lean a little bit more towards being more complicated than most other comparable developed countries. We get away with it, I think, a little bit more for certain reasons, certain advantages that we have as a country in terms of, I think, for one thing, just simply having a larger country to some extent, just like we talked about with the business. The big companies can spread out those costs and spread it across over a larger organization. To some extent, you can do that with a big country too, where you can have some inefficiencies and you can kind of get away with it because you spread that across a very, very large GDP, a very, very large country. So I think we get away with it a little bit, but we have a lot of problems, I'd say.
Yeah, and when you like talk about like problems or having like a good tax system, like what in your mind are you picturing when you describe a good tax system? Is it like simplicity? Is it a smaller size? What do you say? And I'm curious, what countries call them out? Who do you think has a worse tax system than us?
The worst. So the things that, I guess there's three main things that I would point to as the characteristics of a very good tax system. One would be simplicity / clarity, right? People should understand the tax system. It shouldn't be opaque to them. One would be the second point would just be that the taxes are limited, right? Limited taxes, limited government. You can to some extent, even if you have an inefficient tax system, but your taxes are low, you can kind of get away with it. But the third thing that I would prioritize is kind of fairness, but maybe not in the same sense that a lot of other people use the term fairness. Fairness in that we're not taxing the same dollar multiple times. That we have essentially a relatively flat system, that we're not advantaging one group over another. We're not taxing this person multiple times on the same dollar and not taxing this person at all. Obviously, we want to have very few people we're not going to get to a point, and we probably there would not be support to get to a point where we have a tax system with zero progressivity in it. But we obviously have a tax system right now that is extremely progressive. You have certain years where over half of taxpayers have no federal income tax liability. Now, and I think that actually hides what's actually going on. I think people have a sense, and I think they're correct in having the sense, even if they're not very rich, they have a sense in which, yes, they're paying a lot for the government, and that's true. I think whether you're rich or poor, and the way that I would describe it is we sometimes act as if there's a very clear divide between businesses and individuals, but in reality, it's not that simple. And so I think you can see it a little bit clearer if you imagine a moneyless society. There's no cash, there's no money. Everything's done through bartering, I guess. So imagine you had a farm in that situation, or you have a set of farms, and the government comes in and they take 10% of all the farmers' crops. If that happens, what's going to happen is the farmers and the workers in the field, they're going to have the farmer will have less to pay the farmers in the field. The consumers, the buyers of the products, they'll have less. The farmers will have less to sell to them, and the farmers will have less to eat themselves. And the same thing is true, I think, that even though a lot of the taxes are, I guess, in law, they're being paid by businesses or by the very wealthy, that doesn't mean there's not impacts that are flowing through to everyone else.
Got it. Yeah, thank you so much. And then I just had a few quick like logistical questions just to reiterate. Do you know how much extra money is expected to be gained from this like additional investment in the IRS?
Yeah. So there's very different estimates out there. So that gets down to the question of the tax gap. So this is what the IRS has been highlighting, is that they said that there's a very large tax gap, which is to say that the amount of taxes that people owe versus the amount of taxes that people actually pay, they think there's a large difference there. That's part of the issue, but of course, you're never going to get to a point where you have zero tax gap either. Partly because we have such a complicated tax system, where the idea that there is a fixed number, that this is the tax gap that says this is the actual amount that people owe, that's really hard to say because there's going to be disagreements. There's a lot of interpretation that goes on where one group might see it this way when interpreting this tax law, another group might see it a different way. So it's not nearly as crystal clear as sometimes it's portrayed. But just to give you a sense of what the numbers are, the CBO put out an estimate that approximately $180 billion was how much they expected would be raised, compared to the $80 billion that's going into the IRS. So you get a sense for essentially a little bit more than 2 to 1 in terms of how much they're collecting versus how much they're being given. There are other estimates that suggested the IRS came out with their own estimates. They were unsurprisingly a little bit more optimistic. So there's definitely a range, but 100 on the lower end, some in the hundreds, and some maybe up higher toward on the higher end towards 300 billion plus in some estimates. But that also depends on how they implement it. And one of the things that we're seeing here is they've front loaded the things like taxpayer services a lot more, and they've pushed back the enforcement. So my sense is a lot of those early estimates are probably too optimistic, that it's probably actually significantly smaller than some of the more favorable estimates that were out there.
I see. I can see how, it could have different estimates depending
Yeah.
on what the motivation is. But and then also the IRS only deals with federal tax matters, correct? So is this funding going at all towards city or state tax enforcement, or is it only at the federal level?
Yeah, this is all federal funding here. Yeah.
Is there reason to think that the tax gap at the federal level is a lot higher than that at the city or the state levels? And is that why they're targeting it at that level?
So I mean, it's just a different, it's Congress versus the states. They're going to act on their own accord, I suppose. And I would say, while I probably have a little bit more concern about what's happening at the federal level in terms of whether it's a good direction or not, I will say the states have actually made some significant improvements. So a lot of the states are, I think, simplifying their tax systems. They're going to flatter systems, which I think offsets a little bit of the complications that are happening because of the federal taxes.
Well, great. Thank you so much for answering my questions. I'll now pass on, but thanks for being here.
All right, I got on a little late, but loving this conversation, and it's interesting, of course, to be talking about our favorite thing, taxes. Now, just to highlight what you just said. So, the IRS is going to be given $87 billion of taxpayer money to then collect hopefully $180 billion from taxpayers. And the average American citizen who knows that their government is in what is the deficit now, the debt, we're over 20
About
trillion
31
is thinking of this as a positive thing. I'm struggling with that. I'm really struggling with that. We just said we're gonna spend 87 to take 180, and we're happy about it because we're running so efficiently.
Well, yeah, I'm with you. I absolutely don't understand the logic. It's kind of the, when your perspective is focused on the government, and if you want there to be more money to go around for government programs, then sure, you can look at that. Hey, we got $100 billion out of this. This is great. But you're right. For taxpayers, there's huge costs imposed. There's huge costs. Again, yes, you might catch a few people that you weren't going to catch that were legitimately cheating on their taxes. I think that's probably the exception. I think most people that even the people that aren't paying, that where an adjustment is proposed and they ultimately have to pay more taxes, it's probably, I don't think most people are actively cheating on their taxes in that way. People make mistakes because guess what? The tax system is hard. And there's people that make yeah. And there's people that make mistakes both ways, by the way, too. And so there's I think a lot of people that overpay taxes, because I think I'm probably one of these people that tends to want to be a little bit more careful because I just don't want to get in trouble with the IRS.
And I saw that from before today, the story being written as you don't have to be concerned about the $87 billion because we will be getting this much. But it's a logical fallacy because you're robbing from Peter to pay Paul. So you're saying I'm going to take this to spend this, but you're not taking it from someone else.
Yeah.
You're getting it from the same people that you took the 87 billion from. Meanwhile, it's not necessarily getting repurposed directly into some social service. That's not. So it's another strange thing is that we're not told that this IRS collection of the taxes is then going towards something particular, as if we have a task force to cover the tax gap.
Yeah.
I guess that the next comment or question I have is that when we're talking about calculating a tax gap, it's another strange thing to me because we don't know if those are active litigation cases where someone's claiming I don't owe this money, or they're making an estimation based on what ends up being a relative situation, because when these things go to litigation, the person's generally not claiming they evaded the taxes. They're generally claiming I don't owe them for some reason. When we're talking about a large, we're not talking about your grandma. We're talking about a large corporation or a very wealthy person. Even if they did cheat it, they're normally trying to cheat it by hiding under some part of the code.
Yeah. Yeah. So when we're talking about the tax gap, where that's coming from is the IRS does a study. They do this periodically. I don't think it's every year, but they update it from time to time. And so what they're doing is they're basically taking a small sample of the population, and this is called the National Reporting Program. And they're looking at this small sample and they're going to say, okay, and they'll oversample from higher end taxpayers to get more of the rich people and businesses. We'll take this sample and we're going to pretend like this sample is representative of the rest of the country. And we'll adjust obviously for the fact that we're oversampling from the rich. And let's apply these audits from hell on these people and get the most intense audits that we can, and that's what they're referred to as audits from hell. And let's see what sort of adjustments the auditors are able to come up with. And so that's where they're coming up with these estimates. Problem is, what they're doing is they're not just taking that number that they come up with and extrapolating that out to the rest of the country. They're actually saying, well, even within this group that we've done these audits from hell, we think there are some auditors that are better than others. And so we really trust these auditors that are coming up with the biggest adjustments. These other auditors that aren't finding as big of numbers, we don't trust them as much. So we're going to pretend that they were catching as much as these guys up here. And that adjustment that they do, which they call a detection controlled estimate adjustment, I think, DCE adjustment, that ends up tripling the size of the tax gap.
Wow, that's actually kind of hard to believe. And are those audits, really quick, are those audits then immune from enforcement, or are those people basically treated differently than others by chance?
So it's just a lottery. It's bad luck of the draw. So yeah, it's bad luck if you're part of these audits. I think they are legitimately randomly sampled, just oversampling from the rich, but they're just the same as every other audit. In fact, they're worse because they're so intense. On the other side of things, there is a sense, or there are some activities that are not caught in the tax gap though. But those are things like a big part of that would be illegal activity. You're not going to have drugs, prostitution. There's a lot of things that the IRS just is not going to have visibility on because people don't tend to report their illegal activities. And frankly, there's not much talk about how the IRS is going to come in and fix those issues. And so I think the IRS is interested in expanding the tax gap measure to capture additional things like these illegal activities, but it's not exactly clear how they would go about solving that either.
When we're talking about the 400,000, is that number specifically talking about what a person is claiming that they have made as for themselves net, or are we talking about the gross of a small business?
So it's kind of vague how they have not really clearly defined what that means. So they'll frame it as we will not the audit rate on individuals on small businesses and individuals making less than $400,000 will not increase relative to historical levels. So beyond that, honestly, they have been
Wow.
very unclear as to what that means. And even within that, of course, you could keep the audit rate the same for someone making less than 400,000. We could still say, let's say we had 5% of people that were in a certain group that were audited before. You could keep that 5% the same, but maybe you increase the intensity of those audits, or you can do some other things that don't necessarily count as audits. And I think you see that a little bit in this document that they put out, is that they're going to be maybe gentle reminders, shall we say, instead of audits. So there's ways that even if your audit rate is not going up, that doesn't necessarily mean that this doesn't affect you.
Yeah, people may be surprised that there's plenty of sole proprietorships which are doing well over 400,000 in gross, but the owner may be only benefiting, $50,000 because it costs a lot to do business, and those are pretty important pieces of the American economy that we will tax out of business.
Yeah. So my sense is that it's your adjusted gross income. So
Yeah.
right, so exactly who's going to get caught up in that? Again, I don't put a whole lot of stock in the $400,000 number at all. I don't think it's very meaningful, because I don't know what the historical rate they're referring to is. I think there's just a lot of question, and frankly, it's not legally binding. There's nothing in the legislation that says that. It's just that they got a lot of pushback about it, and so they said. So Secretary Yellen put out a letter that said to the IRS saying, please don't do this. Please don't increase the audit rate on people making less than $400,000, but kind of left the door open that it depends on your interpretation.
Yeah. Do you know if when you had mentioned the third party services, I'm not sure the terminology you used, but we had talked about Venmo and PayPal, but then eBay, Facebook Marketplace, would those also be considered under that category?
I think yeah, any of those, Airbnb, anyone that's kind of set up a third party payment platform to pay people to kind of operate kind of in the gig economy in some sense. Sometimes it's just literally just payments between roommates that might be caught up in that, but that's what they're targeting there.
Wow. My final comment before we get to some audience questions would be something maybe you could, a thought that you could comment on with your expertise, is that taxation in general is a powerful tool and political tool. We seem to have gotten very far away from what the founding principles were as far as the morality of taxation, and that it, besides the practice of how that there was actually there was principle at play with the way that people are taxed and the nature of income. It's strange to me that it is not a bigger political Achilles heel. And what I've noticed is that there's a certain amount of revenge that many voters feel, that as if they want to get the person that they think is cheating on their taxes. But it's very far. The idea to me is very foreign, because it's almost like you end up hurting yourself and the economy as a whole. Something I've struggled to understand, because it seems like there should be a much more bipartisan goal to take taxation power, to reduce taxation leverage from the federal government.
I mean, I absolutely agree with you. I personally reject the idea. Personally, I don't make $400,000 a year, and even if the IRS were able to stick to that promise, so-called promise, I would totally reject the idea that I am not going to be affected by what's happening to other people. For one thing, I think that these if you work for someone that makes more than $400,000, if you buy products from people that make more than $400,000, if you hope to make more than $400,000 at some point in your life, we're all kind of in this together in some sense. And so there has been way too much, I think, dividing along class lines, where we see this with this $400,000 threshold. It's kind of meant to divide and say, if you're below that threshold, you're fine. But we want to get somebody, and we got to get this 2% here. Problem is, I think we've mentioned the debt and the deficit. That's not sustainable. You look at the income of the 2%, the 1%, 2%, 5%. We can't sustain this. We can't just simply put it all on the backs of a very small handful of taxpayers. One of the things in the most recent White House budget, if you looked at just the increase in the proposed taxes over the course of from one budget to the next year, that was actually significantly larger, almost double the total amount of wealth ever accumulated by all the people in the Forbes 400 list. So we talk about this as if the billionaires can pay all these taxes. They can't. It's mathematically impossible. They can for a very short period of time, maybe, but that's not sustainable. Once you tax the entire wealth of these people, it's gone. And even that doesn't sustain the levels of increases in taxes that I'll talk about. And so if you look at a lot of the European countries, for example, they have more expansive social welfare states, for example, but they're paying for that largely with taxes on the middle class, taxes that are paid for by everyone. And actually, that was kind of the way it was here in the United States. If you went back to, say, the 1960s, there's a lot of talk about how the marginal rate was extremely high back then. It was, but they didn't have the same system where a lot of people were essentially exempt from taxation altogether, which we have today.
All right, thank you. I went a little long. It was fascinating, and appreciate all the answers.
Yeah, thank you. Thanks for the great questions.
Well, thank you for all the great questions to our panelists. And we've got some really great audience questions lined up as well. And first of all, we have got Kristen Tokarev, who's one of our We the Future contest winners in the audience, who asked a question that several other audience members asked as well on what would be the best way to streamline the IRS. I think Kristen actually says replacing, or what would be the best way to eliminate the IRS, Kristen says, replacing all federal taxes with a single 20% sales tax with a uniform rebate for all Americans to compensate the poorest ones for the higher prices. And Sandy Thatcher and John King and Dr. Braverman all asked various versions of that question as well. Sandy, I think, asked about a value-added tax as in European countries.
Yeah. So going back to the framework that I view it through is the three characteristics that I'd like to see in a tax system: being neutral, being clear and simple, and being limited. I think the best way to do that is through some form of consumption tax. And so there are different ways to get about that. And there's certain advantages and disadvantages. So it sounds like basically the proposal that I'm hearing is essentially along the lines of the fair tax proposal, which I think is a good proposal. There's other ways to get about us doing a similar thing. But the idea of all of these proposals, there's 5 different ways of getting about to a consumption tax base. And the idea there is, again, that you're taxing each dollar once and not multiple times. And you're taxing it at a flat rate. And then you bake in progressivity in some way. And so I think the fair tax is a good way to do that. I know it's gotten some heat from some people that have been critical of it for certain reasons. I don't know if we can get into all the details specifically about the fair tax. I think it is a good proposal. I think there's other good proposals out there that do something similar. There's some that are pushing more for a destination-based cash flow tax. I think that's another good way to get about it. There is the VAT approach. I think people have some concern about the VAT. Conservatives or more libertarian oriented people tend to have more concern about the VAT, not necessarily because they think it's problematic in the way that the tax operates. It's a very efficient tax in that sense. I think where people have some concern about it is that it can be kind of hidden. And so that's a little bit of the advantages and disadvantages you see sometimes is how maybe it's not one of the 3 things that I well, I guess kind of is. It falls into whether it's clear, right? You see the taxes that you're paying. And I think to some extent, that's one of the advantages of the fair tax is it's very clear when you buy a good or service, you're going to pay your fixed percentage, and it's clear for the person that's paying the tax. Some of these others are a little bit less so. So I think it's a great idea. There's other great ideas, and I think there's good dialogue to be had about the advantages and disadvantages of each.
Well, thank you. And if we could just ask one more question that I think is really very interesting. Lilibeth asks, over the course of 9 years, is there a possibility of using AI to do audit work? She says, rather than hiring all 87,000 manpower to do the audit, is that something that the IRS has thought of, is using AI? And if so, I mean, what would be the implications of that?
I had the exact same question. Honestly, I haven't seen anything from them. But it is an extremely astute point, I think, because you're right. If you look at the sorts of tasks that AI can do, things like auditing, things like accounting, they're actually even things like putting together regulations in a simple way and guidance in a simple way. Those are things that AI should make a lot easier. So while most of us are thinking, okay, this AI that's coming out there, is that going to be coming for our jobs or for my job? Well, the IRS, I guess, has this nice situation where there's all this funding coming, and I'm not sure whether they have enough ways to use it that it's going to cost anyone their job. So yes, I think in theory they should be able to use AI to do a lot of these things, but I don't think there's been a lot of talk about exactly how they would do that or whether they would do that. They do have some. They have mentioned, for example, using kind of chat bots to assist taxpayers, but nothing in the sense of like, okay, we don't actually need 87,000 new employees. We still need those 87,000 new employees, but maybe we'll have some additional features on the side.
Well, very interesting. And we are past the top of the hour right now. And Janine, would you like to make any closing comments before we go?
I'll just say thank you so much. It was a very, very stimulating and informative session that's a bit mind-boggling. But as I really liked what Jules said. It's like we're taxing the American people. We're the ones paying for this 80 billion to then turn around and try to get more out of us. It's really very interesting.
Yeah.
Anywho, thank you for your time, and thank you for doing this kind of work.
Yeah, thank you all so much. Thank you for the work you do as well.
Thank you.
Well, and thank you to our audience for being with us. And we invite you to come back next week, Tuesday at 2 p.m. Eastern. And we're going to be talking about the State Department's role in keeping our country safe. So thank you.